Bro, like, look at this, man. Like, this is crazy. See, look at the entry. Yeah. Bro, this is fucking good, man. Like, bro, look at this entry. What's up, people? Welcome on my YouTube channel. And in today's video, I want to show you how I caught a very beautiful selling opportunity, selling trade on US30. Guys, this trade was crazy. Just look at how it went straight into profit. I actually anticipated a very nice sell right here, and then the trade just went straight boom to hit take profit, guys. And you can even see where the take profit was. This is so amazing, guys, and I will show you exactly how we how I traded this, how I anticipated this trade, to the time how I managed the trade to take profit. So yeah, and I just want you guys to be with me on this channel. Like this video if it makes sense to you, and also don't forget to share with other friends. Oh, by the way, if you're new on my channel, consider subscribing, because I'm gonna be doing this breakdown analysis each and every single day. So just make sure you stay and watch. Okay, so I want to show you the before. So this was the before. You can see this is how I anticipated a very nice move on this trade, the before, and this is the after. So you can even see how everything went. So yeah, now I will take you on the charts. I want to show you how I actually planned the trade, how I saw the opportunity, and how I landed on a how I landed on sales. Okay, so first thing is structure is very important. So in my case, I look at a 1 hour, sometimes I look at a 4 hour, but if a 1 hour is enough to tell me an overall direction of the market. And my favorite time frames are only three, which is the 1 hour, the 15-minute, and yeah, the 1 hour, the 15-minute, the 5-minute, and the 1 minute. Okay, so those are my favorite time frames. So in this scenario, we can see that the market actually broke to the downside. So we have a breaker to the downside, which is also considered to be, oops, yeah, it's also considered to be a break of structure. Okay, and then next we can see that we also have another break of structure down here. So remember, if the market breaks to the downside, the market is likely to go down. Like, the market is likely to continue with the downward movement. So you can even see that as soon as the market broke this structure, the market still took the downward direction. So you can see that the market is currently in a bearish direction. Okay, so which means in this scenario we're going to be constantly looking for sells. So that's my first thing that I look for, and I'll put it here, which is structure. Okay, structure I've identified. We are in a bearish. Now the next thing is break of structure. Yeah, was my structure broken? Yes. Where was it? To the downside. If the structure was broken to the downside, it means I'm gonna be looking for sales. If my structure was broken to the on the upside, that means I'm gonna be looking for buy. So in this scenario, my structure was broken to the downside. So this is it, and I'll be looking for sales. The next thing is I want to see mitigation. All right, so mitigation is simply you likely to see price going back where it is coming from. In this case, you can see this pullback. Yeah, other people call it a pullback, yeah, other people call it whatever, but I'll call it mitigation, because this mitigation, the institutions, they consider it to be a process whereby they're trying to minimize the losses that they have incurred on the sponsored candles. So in this case, it's the same pullback, right? So when the market is doing this pullback, there's a lot of things that are happening, and one of it is what is called is the market is engineering liquidity. Okay, the market is engineering liquidity. And after the liquidity has been engineered, so in this case, which one is the liquidity? Liquidity is simply all this movement right here, this lunging character, all this thing that's liquidity. Okay, so I'm looking at a couple of things. First, I'm waiting for structure, after structure, break of structure, after break of structure, mitigation, after mitigation, liquidity. After the liquidity has been engineered, the next thing that I'm looking for, I'll look for an order block. Okay, so I'll look for an order block in my area. So in this case, you can see that in this space we are going to consider this as our order block, and on the other hand, on the other trade, we're going to consider this. So remember, an order block, you consider the last candle, the last buying candle in a bearish move before the bearish movement. So in this case, this is the last bullish candle before the bullish movement. In this scenario, I'll consider this area as my order block. Okay, and your order block becomes an area of interest if you are really interested in taking a trade in that particular area. So how do you confirm? How do I confirm that? How do I confirm an order block? First thing, remember, I'm waiting for liquidity to be engineered, and liquidity was engineered right here. Okay, and then the other thing that I'm waiting for is I'm waiting for this liquidity to be taken out, all this liquidity to be grabbed. Okay, so in this case, this is my liquidity, and I'm waiting for liquidity to be grabbed. So you can even see, and all the liquidity was grabbed. So as the liquidity is being grabbed, there's this thing whereby price will look for an order block so that it can reverse. Okay, so after liquidity engineered, I'm looking for liquidity. I'm looking for liquidity grabs. After liquidity grabs, and then I'm looking for what? An order block. So normally my order block is, I confirm my order blocks by using a Fibonacci. So I'll bring my Fibonacci from top to bottom, and any area that is above the 70%, any area that is above the 70% is a valid order block. So in this case, this is the order block that I chose. This is my Fibonacci right here, and in this case, this is the order block that is available, and this one becomes my POI, which is my point of interest. Why? Because it is above my 71%, my 70%. So I'm gonna write it right. That means you will now look for, you will now only consider order blocks that are above the 70% variable levels, and those becomes your P point of interest. Okay, so in this case, now we have a POI, a point of interest. We have actually identified this point of interest because it is above the 71%. And then the next thing you need to consider is to confirmation. Okay, confirmation. How do you know that the trade, it's now time to enter the trade? Or consider confirmation. So okay, as soon as market came in this POI, okay, I'm gonna go on a 1 minute time frame. Normally I'm doing this on a 1 minute time frame, so I want to explain very carefully, so you have to pay attention. So there is this liquidity that is being engineered inside the POI. Okay, inside the POI. Okay, so before I go on the POI, I want to show you a structure that I'm looking forward to see before I enter the trade. Right, the structure that I'm waiting to see in my POI, let's say this is a point of interest. Okay, inside a point of interest, this is my POI. I'm actually looking forward to see something like this. I want to see price coming inside my POI, and then going, and then yeah, doing something like this, and then I want to see liquidity being grabbed. Okay, after liquidity has been grabbed, I want to also see liquidity being grabbed on the downside. After that, I want to see price coming in the 50%, and then that's where I'll be looking for my buys, and then that's when I'll be taking my entry. So I'm actually looking forward to see liquidity being grabbed on the upside, and then I'm also looking forward to see liquidity being grabbed on the downside. When this thing has actually happened, that's when I'm gonna be coming in to be taking for sales, and my stop loss is gonna be just right there. Okay, and all the way to the downside. So let's see if this thing actually happened. Okay, so when I come here, I'll actually do this. Okay, so you can actually see right now price actually came in our POI, and it was creating these high highs and higher lows, liquidity. And then this is my another area, my where I'm having the lows of the liquidity. So you can see that the liquidity was grabbed up here, and then down here the liquidity was also what was also grabbed. Okay, so the next thing that I'm looking for, I'll bring some sort of a Fibonacci, but sometimes I do this without bringing a Fibonacci, and I'll consider only the 50%. So in this case, in the 70%, this is exactly where I took the trade. And yeah, I entered the trade, and the trade just was like that, and that was the movement. And on the other hand, so you can actually see, like, it's not different from what I've just drawn down here. This setup and this setup all are the same. Okay, so that's how the trade was, and the trade actually just moved so quick straight to profit. And you could also apply the same thing, apply the same setup by taking this trade right here, and that means you could have had another trade right here. You see, because in this scenario we have this liquidity, yeah, all this liquidity that was engineered right there, and then we have also this liquidity that was resting down here was taken out. Okay, I'm not sure if you understand what I mean. So all this liquidity was taken out on the upside and then on the downside, and then the market went back. So we're gonna bring our fib from this high to this low. Okay, so you can see you could have entered your trade right here, and your take profit could just be right there, which means this was your second trade. Then the third trade, but actually I took only one trade, guys. So the other one is you could have considered this area as your mitigation zone, or else you could have looked this side, brought this area where we are seeing our liquidity has been grabbed, and after that you could have brought your Fibonacci from this high to this low, and as soon as you did that, you have a perfect entry position, which means you had like nice entries on this single movement. After that, the trade just moved so crazy, you know. I don't know if you can see that. I'm trying to make this video not so too long. I mean, not long, so you can see on one setup there are actually 3 trading opportunities. So my trade was actually, my take profit was actually just right here. It was actually just right here. So you can see how crazy that trade went straight into profit. Okay, so this was it, guys, and this is the trade. This is the before everything, and then this is the after, and I'm also gonna show you the proof of everything. And yeah, this is how I caught this trade, guys, and I actually made like 7% on my account, which is totally great, guys, and I'm very much excited. And yeah, I don't know how much ish, guys, I'm very much excited. But anyway, guys, so the traders literally hit our TP. You know, the traders literally hit our TP all the way from the top. Let me close. Yo, that was awesome. That was awesome. That was crazy. That was crazy. So much for watching this video, and if you like the way I trade, if you want to learn how I trade, you can actually like DM, just check my Instagram handles, my wadi. You can find me, I can teach you. I have a course that I'm teaching. It's actually, guys, thank you so much for watching this video. Don't forget to hit the like button, and don't forget to hit the subscribe button. Otherwise, forex is the future. Let's meet at the top. Anyway, guys, I'm so much excited. Bye.